Nvidia stock. This stock is flying to the moon. This is the talking stock of 2023. AI is here. Tech is number one. Yes, tech is back in the race. Nvidia stock is the talk of the town in 2023. But is it good value now? Is it worth buying? Well, you can find out right here at Barry Charles, your one-stop shop for everything finance. And today we're going to do a stock analysis on Nvidia stock and have a look at the intrinsic value of the company and look at a lot of the key metrics to see if this company is worth your still buying at these accelerated rates. Well, let's get to it right here, right now at Barry Charles. Welcome to the channel and Nvidia stock, here we go. Yes, well, Nvidia stock, obviously one of the tech giants now, going to over $1 trillion. Congratulations. Well done to you. This chip maker has got more than that, but the chips that is going into a lot of big companies and their data analysis is absolutely gone to the moon. Absolute beautiful stuff if you're a shareholder earlier on. But if you've only just brought in, have you been buying the hype and not the actual intrinsic value? Well, let's find out. Shares outstanding. Yes, shares outstanding in 2021. Well, actually, shares outstanding had been increasing since, the last few years, but it was changed in 2022 and it started to decline by about 2% to 2.49 billion shares outstanding. So they've finally stopped diluting you and they've actually started to buy back some shares, which has been good for the company because the stock price has risen as well. So they are intrinsically getting more value that way. So absolute brilliant stuff from Nvidia, buying when the stock was down. So that's very good for you as a shareholder as you get more money. A dividend is nothing of a dividend. Is there any point even giving a dividend? It's 0.03%. But they're doing that. Obviously, the price had skyrocketed, so it would have been a little bit better than that. But still, it's really pathetic. You could argue maybe they should put that up in future years. Well, we'll find out. Now, the revenue. Well, the revenue from in 2019 was 11.7 billion. And coming now, it's just gone smash past 40 billion and more going into 2023 as it continues to skyrocket. So, this is you can see why people are getting excited with the revenue just bouncing up like that, a 4x pretty much in 4 years. Absolutely outstanding if you're a shareholder, and that's what you like to see. The net income has been a little bit up and down. Not too convinced about the net income at the moment, but yeah, it's looking at probably being about 13 billion by the end of the year. So very good stuff from the total assets. Let's have a look at the total assets of this company here at $49 billion. Yes, $49 billion. Compared to its total liabilities of 22 million. So yes, when you look at the stock, obviously it's got a lot of assets to sell off to get rid of their liabilities if they have to, so they've got no problem there. Now the free cash flow, $8 billion. Well, you'd hope that's going to skyrocket from here with the way they're going. It's up 50% from last year, so you can't really complain. But my concern is long-term debt of $8 billion. So they've got enough to pay off the long-term debt right here, right now. So that is good. But acquisitions, baby. This $8 billion they want to use for acquisitions. They want to increase the conglomerate. They're going to look at the little companies. They're going to put some pressure on them. Boom, buy. So I think this company needs to get to 50 billion or more. Just like how Facebook has done it before. And just buy out some of these other ones that are in competition. Get them out the door. And then they can really ramp up their bottom line. Because as the bottom line's been a little bit wavy over the last 4 or 5 years, if they can really get that consistent, then you'll see more and more people come into the stock. But very, very much a big player now in the Nvidia stock in the whole scheme of things. So what is the intrinsic value of Nvidia right here, right now? Well, there's so many ways to calculate intrinsic value, but this is just one effort. The Graham's calculator here. So we're going to say Nvidia stock, because the stock goes up and down like a yo-yo, but we're just going to say for this example it's a $500 stock. The expected growth to be about, just on average 10%, and earnings per share is at 11 as well. So let's just have a look at what we get. Yes, so at the current rate it is overvalued. So right now the intrinsic value roughly is around $327 compared to the $500 mark. So you are paying overs for future potential at this stage. But if it goes up to 20%, then you're looking at about a 10% undervalued at 556, and then if it flies up to 30% expected growth, $785 a share. But is that really realistic? Probably not. But if we start to like double the earnings per share, then the sky's the limit. You can look at $1,000 plus. But yeah, at the moment, Nvidia's just a little bit overvalued at the moment. Nvidia for mine. If I was going to say buy the stock, if you believe the future is going to continue to be sweet sailing, definitely I think you'll make money in the future, but they're going to have to continue to grow and grow and grow from here to continue this rising rate, because if they start to steady down, then you'll see the stock price get less and less attractive and less likely for it to move forward. So that's the only problem when you get into some of these hype stocks. I mean, that's a great stock, don't get me wrong, but at the moment I just would be staying away from it if I was you. If you are in the stock, I would definitely hold. Keep riding the wave. You might want to take some profits, because I can expect this to drop quite dramatically. The stock, you just need a little bit of bad news and the stock might go flying down. But if Christmas continues to go well for their next earnings, then obviously the stock may continue to rise. But there is going to be a big downturn at some point, and whether a recession is going to be the answer to that, that's probably what you have to decide at home. If this is what is the stock you want to be in long term, do you think the stock is going to continue to be a great stock, or is it more of a meme stock of the last couple of years? It's doing great, don't get me wrong. Everything at the moment is running rosy, but the net income has been like a yo-yo. They need to get that more consistently going up. It's been up and down, up and down. They really need to get that consistent. Is that because it's a cynical company? It depends on when they need it. When there's a recession, that is probably the problem with Nvidia stock. Will they crash and burn because no one's buying their chips? So that is the worry, where some of the other companies can continue to generate wealth in the other matters. So that's probably the danger signs if you're looking to join into Nvidia stock. So thank you so much for joining me on the Barry Charles. I hope you got a bit of insight into Nvidia stock and where the stock is at the moment in terms of its intrinsic value. And you can leave a comment below and tell me if you disagree or agree with what I have to say here. And any more knowledge is great for everybody. So share the love with everyone. Remember to like and subscribe to the channel, and have a great day out there.